morning. My name is Robin Dunbar. I'm the president and CEO of Grid Metals. Grid is a exploration development company focused in the province of Manitoba for critical metals, nickel and lithium.
Robin, nice to meet you. Good to be talking about Grid today. The market has seemed to pick up. Lithium prices are strong again and nickel prices are strong again. You've also put out some news releases this year. You've picked up some more lithium ground and you've got some drill results. So let's talk about lithium first, and then we'll come on to the nickel and the copper and the PGMs later. So could you just summarize the drill results from Donner Lake, please?
Sure. At Donner Lake, to date, we've identified two LCT pegmatites. We're drilling. We've drilled both of them now, and we've gone back to the Main Dyke right now, and are drilling to put together a resource. I'd characterize the results as good grade, consistent. The dikes aren't that wide, but they're very consistent and high grade, and they're vertical. So our thinking is that they'll be mineable, and they're in an excellent location. So we're pleased what we're seeing, and we want to put together a resource by the end of with the drilling to be completed by the end of this March.
And how much strike length of those dikes did you drill out, and what depth did you get to?
Sure. So last year in 2022, we drilled at the Northwest Dyke, and we had about a strike length there of about 600 meters. Deepest vertical was about 250 meters. We didn't have enough time to complete enough holes to put together a resource there. We're now at the Main Dyke, and we've identified kind of a core area, 8 to 850 meters. And now the deepest vertical hole, I think, is close to 300 meters. So really, we're now in the process of effectively drilling off a grid pattern at 70 to 90 meter step outs to put together initial resource. And I can say that generally speaking, in that window, the 800 meter strike length at the Main Dyke, we're seeing pretty consistent spodumene intervals, and that's the same at the Northwest Dyke over the 600 meters as well.
And is it fair to say kind of it's 1 meter at 1% lithium L2O?
Li2O, yeah. A lot of the intercepts have been over 1.5%. We'll see what the average is, but it's pretty good grade.
1 meter is kind of a rule of thumb, kind of the average thickness.
No, I mean the Northwest Dyke is somewhat over 4 meters, and the Main Dyke probably around 3 meters. But the other thing we're seeing now is parallel dikes. So we've seen there's some variability. The narrowest will be 1.5 meters, 2 meters, and the widest would be 9 or 10 meters. So this is why you do the resource, to get the average and see what it is.
Yeah. But essentially, it's wide enough to be able to get a bit of mechanized equipment in there. I think the kind of the 2 meters, 2.2 meters is your typical minimum.
That's right.
Mining
width
for mechanized.
Yeah, we think we've modeled it using a 3 meter mining width, and are satisfied that the mining would be, if it's underground, be pretty economical based on it's vertical, very, very consistent, good grade, and you're mining a white pegmatite and a black host rock, so visually easy to look at as well.
I know. Let's not jump the gun, but there's when a typical method for dealing with a relatively narrow but subvertical resource in a competent rock is something like long hole open stoping. Could you imagine that being a kind of a logical?
I think approach? So. Yeah, I think so.
Let's not jump the gun, but
no, exactly. Yeah.
And you're also talking about step outs of 70 to 80 meters, which is an indication of statistical confidence in that distance. That step out. So, what by implication you must have had relatively similar grade in your or consistent grade in your drill hole intersections?
Yeah, I mean, so we back in 2018 we drilled at the Main Dyke, and we did a series of holes, shallow holes, about probably average 50 meters depth, and those were over the 800 meter strike length. I think we did 10 holes in that, so pretty wide step outs, and then all those holes hit. They ran from 1.5 to 1.8% Li2O, and so we're really following and drilling underneath that now, with lithium, it's there's a certain amount of visual estimates you can do because of the uniqueness of the spodumene blades and mineralization. So if you don't see any spodumene, you're probably not going to have a lot of lithium. So we're comfortable in continuing to drill based on visual. But we're not one of the companies that would, some companies say, oh, we got 20% visual spodumene in these holes, and we don't, we're not really comfortable doing that. We want to wait for the assays before we put out the numbers.
I've been burnt by putting out visual estimates before on mineralization, and it's always a dangerous game. You've just got to wait for those assays. What's the timing of the drilling? Are you drilling there at the moment? And
we are.
How much longer? How many rigs? And what's the program? Yeah,
so we have two drill rigs going, and we hope to finish the about another 5,000 meters within roughly a month. And that would be taking the Main Dyke vertically along the 800 meter strike length down to around between 300 and 400 meters. And then on the Northwest Dyke, we have about 3,000 meters planned to kind of fill in the gaps. And we actually mapped that pegmatite to the north where we hadn't drilled this summer. So we're going to try to extend that a little bit as well. And based on
is that an extra 3,000 meters? So 5,000 meters for the main Dyke?
No,
and then
sorry, but it's roughly 2,500 meters to finish the Main Dyke, and 2,500 to 3,000 on the Northwest Dyke. So it'll be a little over 5,000 meters in and the drills we're making pretty good progress. It's mid of winter now, so it's drilling slowed down a little bit, but they're still making pretty good meterage. So.
And so, let's say finish drilling by the beginning of March, assays back. What are your assay turnaround times like at the moment?
It varies. It's from 3 to 9 weeks. With the lithium, sometimes we can rush certain assays to get them faster. So they're starting to come in more quickly now. So we would hope to have most of the assays back on, say we fit, mid-April, something like that. The average is 6 weeks, something like that.
Yeah. And then you obviously would like to put out a maiden resource.
That's right. Yes. And we're consulting with a resource geologist to kind of guide us in terms of density of holes and, that type of thing, what we might expect. So
that'll logically be the second half of the year sometime.
Yes. Yeah. I mean, ideally by the end of the second quarter, but there's always delays. So
there are always delays. We know about those delays.
But I might add, since we really just started on the project drilling, about a year ago. So from start to a maiden resource, we're trying to really move things along quickly. So
good. How much is that? So how much of your how much are you allocating in terms of budget? How much have you allocated for this element? Yeah,
so that'll be about another $1.5 million in funding for that. And that project is 75 grid, 25% lithium royalties. So they're funding 25% of that.
So they're funding 25% of that, 1.5.
Yes, yeah. And then we're also doing, we have other things going on. We've got met work going on. We've got a drone survey going on. We're still processing samples from our field program from last year. We have a couple thousand samples that are taking longer to get assayed because there's more of them. So we've got an advanced exploration permit being prepared for to enable a bulk sample. So lots going on. So the total budget for that project is it's right now is roughly $2.5 million. Plus we have to do the resource calculation. So lots of money being spent.
So close to $3 million.
Yeah, something like that.
And the drone survey, what's that going to give you?
Yeah, so it looks like a lot of the mineralization is structurally controlled, kind of faults coming off to the south, and so having a detailed drone survey can you put that together with lithogeochemistry, so you see these fault areas, and if you see elevated lithium numbers in the host rocks, then that gives you a pretty good drill target. So that's our approach.
Are you doing a LiDAR survey? I mean, is it or is it just photogrammetry?
It's magnetics. Yeah.
Magnetics. Okay. Yeah. I've worked with LiDAR, and when you get that incredibly good quality image, which could go through vegetation, that just the structure pops out, and you can see, particularly with the pegmatite, and the dikes going across, you can really see it coming through. So I wondered whether that was that, but no.
Yeah. The other thing too is the mag. It can differentiate between the rock groups, the rock types when you have detailed mapping. So that's another benefit of the mag survey.
Good. Now, what's your cash position at the moment?
We have about $10 million in the till.
And you brought on some new strategic shareholders in the capital raise you did last year. That's
right. Yes, mostly Australian investors. Yeah. So Lithium Royalty was a participant. They were an existing shareholder, and then Primero Engineering, who's doing a lot of work in process engineering in North America in the lithium space. They were one of the largest subscribers. And then AMCI Group, which is a U.S. private equity group that invests in projects. They came in as well. And then that's kind of the core group. And then there was a bunch of high net worth Australian mining investors that participated. So it was kind of a group, yeah. I mean,
no disrespect, but Grid's kind of quite a small company. It's quite North American in its approach. What was the link to Australia?
That investor group had invested in a company called Green Technology Metals in Ontario that went public in Australia, and they're working up in Seymour Lake. And the market cap's done well. They've gone from the startup to about 200 million market cap. And they're looking at, Thunder Bay as a hub for lithium development and potentially a chemical hydroxide plant going in somewhere in the Thunder Bay area. And then they look next door in Manitoba, which we believe is going to become a lithium hub as well. And they sized up the field there and the companies, and thought that we were the best positioned of the juniors, and so approached us to invest. So that's how the discussions got going.
And how are you going to get your market cap from $30 million to $200 million? What are the drivers there? What's the method?
Well, finding economic deposits is really, if you have an economic deposit and the market sees the value there, then your market cap's going to increase. That's really what the business is about, right? So. That's what we're trying to do at Donner Lake and at our base metal project.
And at Tanco, I mean, with Tanco, and you've got the MOU on this, kind of the sales agreement. Yeah. Do you have a kind of an internal calculation of what would make an economic deposit in terms of tonnage and grades?
So with Tanco, and for the listeners who don't know, the Tanco is the only producing spodumene mine in Canada right now, and it's they're at the Tanco Pegmatite, which has been in production off and on since 1968. They're in the process of expanding their lithium operation, and they want more sources of feed to feed the mill. So, they approached us again as a company that seemed to have good prospects for resources, and what we're talking about is toll milling in the range of 200 to 500,000 tons per annum. So what that means is that we don't need as a large a resource to be able to supply 200,000 tons. Where if you have a standalone project and you need to build your own concentrator, you might need 10 to 15 million tons, or more. And so it offers a chance to get in production sooner, because we don't have to build our own concentrator, and with a smaller resource, and also faster. And I think our view is that there could be 5 or 6 years of elevated lithium prices, and if we're able to get in production sooner than later and capture those elevated lithium prices, might be able to make quite a bit of money. So the rock, right at kind of current prices today that we're drilling off is worth about $1,000 a ton. And assuming you could mine it, for $100 a ton, say, that's a heck of a margin. So, it's we're trying to go as fast as we can to be in a position to take advantage of those high prices. Now, that may not happen. Events may pass us by. Lots of things can go wrong. But if we're successful, and you can mine 200,000 or 300,000 tons a year, it could make a lot of money. So that's
even if your mining cost is, or your operating cost, including the G&A and everything, is $250 or $300 a ton. There's still margin there.
Yes. There's lots of margin.
And your take on 5 or 6 years of elevated lithium prices, is that based on the thesis that the cure for high prices is high prices?
Yeah, what I see is a couple things. One, a lot of the major mining and trading companies are aggressively pushing into lithium, and people like Rio Tinto and Glencore and people of that ilk, the trading companies. So the reason, I think, is that they see margins in that business. Otherwise, why get into it? So that tells me something. And then the second is a certain amount of supply that's forecast to come on is coming from things like DLE, clays, types of deposits that most likely will be ultimately able to be put into commercial production, but might take longer than people think because of the processes, relatively unproven. And then the third thing is just the difficulties and timelines of putting mines into production always takes longer than people think. So I think if that's on the supply side. On the demand side, if you go back a few years now, the demand for EVs and the resultant demand for the critical metals seems to be stronger than people anticipate generally. So, China, EU, US now all seem to be on board. So, those are pretty compelling factors. So again, I always say to the guys, any commodity as a junior miner, you're facing the risk that, those commodities could take a nosedive. You have to make your best guess. And, we like the lithium space right now because, there seems to be a strong global dynamic happening, that, we're able to potentially take advantage of.
Totally agree. And when it comes to things like lithium clays, I don't think there are any in production at the moment. And so there's a technology leap that needs to be done there. And with the direct lithium extraction from the brines, again, there are question marks over kind of cost effectiveness.
Yeah, and I don't think it's a one size fits all for each of the deposits. So any particular deposit, maybe the technical challenges may be overcome. And I'm certainly not qualified to make the distinctions between the companies, but I would bet very heavily that not all the clays are going to come into production when the companies say they will.
Yeah, absolutely. Can I ask, how long have you been with Grid Metals?
Since 1997.
That's a long time.
Weren't expecting that, were you? A long time, yeah.
My goodness. And that's a very, very long time with one company. So, you say, to get the market capitalization to jump, to kind of have that step change, it's through defining economic resources, defining commercial deposits. In the long history of Grid, I'm just kind of trying to work out, what signal you can give to the market that this time it's happening and it's happening quickly.
I won't say it's happening quickly, but I think it's happening. On the lithium side, it's something new. We got the major claim block that we have in Manitoba from the Tanco mine back in 2016, before lithium got going. We kind of waited to see that the lithium dynamics looked real, and we were just able to start drilling. We had some issues to resolve with the First Nations and getting an exploration agreement. That took a bit of time while we were working in Ontario on palladium. And so, now it's, we're actively working on the lithium project. And, we just think it stacks up pretty well in terms of some of its attributes that are a bit unique compared to other projects, i.e. in particular, good grade and potentially being able to put in production quickly. And, it's the most consistent drilling we've ever done, where you drill in an area and you get, you hit your target every time. So, that's I haven't seen that before. So, that, in terms of, Grid's history, and we started off being, as a company, Mustang Minerals, we went through some iterations, and we're very close to putting our nickel deposit into production. In 2008, we were actually at the feasibility study stage. And then, the price of nickel crashed and it went to $4. So, rather than refocus the company on, cannabis or the internet, we were patient and, came back when the cycle, started to pick up. And we refinanced and are back, working in the same area in Manitoba that we've been for, since 2005, really. We've been active there. So the one thing, yeah.
You're a survivor.
Yes, we've survived. That's right.
And let's talk about
the other thing too is I've got, I've been through been through some cycles here. So, I've had a lot of years in the exploration business. So, that's been useful. I like to think I've learned something. I like to think I'm still learning, and I think that's really important because it's a very dynamic industry, and you don't want to get overconfident in your skills, right? So but we've got a good team now too. That's the other thing. I think you interviewed Dave Peck before. Dave's got a lot of experience in nickel and base metals, and Kerry Galischuk has got a lot of experience in the lithium field. So we've got a good team, and then we have a good local team as well. So we have geologists and staff, and a facility, and we know the prospectors in Southeast Manitoba. So we're really, although I'm in Toronto, we're a very local company in Southeast Manitoba, and so we're focused on that area in particular.
Yeah, no, I certainly enjoyed speaking to Dave when I went through the technical side of things. Let's quickly talk about the nickel side of the business.
Sure.
From your marketing materials, I can see that you're preparing this a new mineral resource estimate.
Yes.
Can you give me an update on where things have got to and what the plan is for the rest of the year?
Yeah, we're in the final throes of being able to publish a mineral resource on. It'll be the Makwa Mayville and combined project. So it's at the consultants, and we're back and forth now as to vetting what the numbers are going to be. But we're optimistic that we're going to have an increased resource, and one that we're still going to be able to keep expanding.
I mean, I see that you've drilled below Makwa, and you've kind of done a bit of drilling at. I mean, how much new drilling is being added into the resource base?
There'll be about 18 holes, roughly. Yeah.
And then will that be accompanied by a new PEA? Because I think the last one dates back.
Yeah, it stays to 4
quite a long time.
I think that's going to be contingent on the final resource numbers. So just to give you a sense of our thinking, to what we think in terms of a target model for a globally relevant nickel resource is you need about 200,000 tons of contained nickel in the resource. And, right now we have about 100,000 tons of nickel and roughly 150,000 tons of copper and roughly 300,000 ounces of PGMs. So, the way, the path that we see to developing these projects is at some point you bring in a strategic investor to help fund a feasibility study, which can be, $10 to $20 million. They want to see a certain scale of projects. So if we see ourselves, significantly increasing the resource and getting close to the, where we think we can dramatically increase the size of the deposit, then the scale of the project's going to increase, and it would make sense to do more drilling and try to hit our target before we do a new PEA. So that is up in the air. We're doing a lot of work on it, so we're going to be in a position to do it, but I'm not sure that we will ultimately do that. But we'll hope to have the resource fairly soon, and by that I mean within a couple months at the latest, and publish that and go from there and explain what we're doing either way.
So let's say Q2 for the resource, and that will inform whether you feel you've got a shot at that, what you described as being a globally relevant resource. Yeah,
that's right. Yeah, and I think globally relevant. I mean, it's not going to be it's not going to be like a deposit that fits for a major, because they're looking for something that's 20 million tons of 2% nickel, right? Something roughly. But there's not a lot of kind of medium size, I'll call them medium size, 200,000 contained tons of nickel with the good NSR grades. So I'm talking NSR grades between, $60 and $80 US per ton. There's a number of projects that have, billion tons of $20 or $30 rock. And there's, a very few smaller projects that have a higher NSR value, but something in the middle that's got moderate grade, good metallurgy, a long mine life. That's what we're looking for.
Good. Well, it sounds as if I should sit down with Dave once the mineral resource comes out on, in fact, both the lithium and on
that's right,
and on the nickel, the nickel, copper, and PGMs.
That's right.
And are you speaking? Are you doing any marketing? Did you go head over to Vancouver for the VRIC or?
We didn't do the VRIC conference this year due to some conflicts. But we're doing a number of Mines of Money events and a benchmark conference and some things. So we have a fairly active schedule for the next few months. Yeah.
What's the liquidity like in Grid, and what's the feedback coming to you from? What are your investors looking for more of, apart from great results? They all do. Yeah,
I mean the liquidity is getting better. What we're trying to do is explain to people where we're trying to go. What we have and where we're going, and so I think that's the key. Message for us is to get out. That we think that we can make a mine out of what we're doing in both the lithium and the nickel. And the lithium is kind of new to people, and there's dozens of companies with lithium projects, and we're going to do this and that, and so it's a crowded field. So we think as we put together a quality resource and differentiate ourselves and have a consistent message that people will start to clue in that. I always say to people, if you look at somebody like Core Lithium, they got a $2 billion market cap. They've got 7 million tons at about 1.3%. Some of that's pit, some of it's underground. Could we have a 7 million ton resource at 1.3% after this resource? It's possible. So
they mine isn't their focus? We'll get a resource and we'll mine it. I'm not sure that's what you're MO is. It hasn't been for
well,
26 years.
But you know, you got to have something to mine, right? So we're putting in a permit for to do bulk mining by the end of this year, and then after that we will go and get a permit to apply for a permit for mining. So whether it's us mining it or somebody else mining it, if you got a project that can be mined, then you got to mine it or somebody else does. So that's what we're trying to do. So, we're not just trying to drill off a resource to say, hey, we got a resource. People are looking for lithium resources. They're looking for offtake, and they're going to be in demand if we can put together a quality resource. So that's job number one. We're trying to get that done as soon as possible.
And job number two, of course, is looking at monetization strategies, and presumably you'll look at all opportunities or all offers, whether that's
and I've always believed
interest or
that's right,
strategic partner or full outright sale.
That's right. I mean, whatever makes the shareholders money, right?
Yeah. Robin, thank you very much. I know we said we'd only speak for about 15 or 20 minutes, but we've packed more into it.
Thank you, Merlin. It's been my pleasure. Yeah.
Good luck. Speak to you again soon.
You bet. Bye for now.